You join us today for Invenica's Discover the Possible Blockchain Innovation Disruption in Media and Telecoms webinar. This conversation comes just a couple of weeks after CordaCon 2019, R3's flagship conference in London, exploring the exciting applications available on the Corda network. We're joined today by two partners of the Corda network, Invenica and Lab 577, who will continue the discussion on how blockchain and DLT innovation are disrupting in telco and media, from both a business and technology perspective. I will give more details at the end of today's proceedings on how to find out more and some further reading, and also the publication of some upcoming industry articles that accompanies today's talk. This webinar is being recorded, and there will be time for audience questions, but more on this later. Firstly, some introductions. I'm Mike Wilson, CEO and founder of Ditto, and I have the pleasure of moderating today's session. So notes on Ditto, we were founded in 2008, and we're a marketing and business development practice to focus on technology. I'm joined by Gareth Mee, CEO and founder of Invenica, and Richard Crook, CEO and founder of Lab 577. So first of all, some introductions on our panel. First of all, good afternoon, gentlemen.
Good afternoon, Mike.
So Gareth Mee is responsible for the growth and strategic direction of Invenica, a specialist software services business. He is currently working extensively within the emerging technology space, covering AI, blockchain, chatbots, and conversational language, with experience in enterprise integration, mobility, and UX, delivering mission-critical solutions on complex enterprise projects. And then we're joined by Richard Crook, the former head of emerging technology at the Royal Bank of Scotland, where he defined and led the crypto and blockchain strategy since November 2014. Richard has a 20-year career specializing in leading teams to shape and deliver maximum business benefits through technology solutions for some of the largest financial institutions. Leading his team of engineers, last year he set up Lab 577, a software company co-creating application at the intersection of emerging technology and financial services. And it's a pleasure, gentlemen, to welcome you to today's discussion. Hello.
Thank you, Mike. Pleasure to be here.
Right. So just for audience, I'll explain the format of what we're going to do. To start off, I will give a short overview on the topic. We'll then, I think, guys, take some reflections on CordaCon 2019. Then Gareth will share a variety of use cases of telco and media firms disrupting through blockchain innovation with some key insights. And then some key questions really to pose the industry and pose us too, I think would be great. And then it's over to Richard, who will give his perspective on specific use cases, again with some key insights, and we'll open up some questions. And I say there is time for audience questions. If you do have a question, if you just submit them to the form provided online, and my colleague Hayley will collate and chat through at the end. So to begin, a short overview on what we're going to discuss this afternoon and to set the scene. So I think these days banks, telcos, and financial services are all tech companies. Our phones are no longer just phones, they are our wallets, and they allow us to transact and make payments wherever we are. Blockchain is fast becoming the technology that underpins this accessible electronic wallet, making transactions secure, fast, more convenient for the consumer. So we're here to take a deeper look at the use cases of how media, telecoms, and firms are innovating, disrupting with blockchain and DLT. So over the past couple of years, we've seen a rise of telcos becoming banks. Notably, Orange were a major telco trying to transform their offering, allowing customers to use them for basic banking features and change the payment cards. But as more and more telco and media firms want that competitive edge, how are firms getting ahead with this innovation? Disruptive technology like blockchain sure can give firms the opportunity to offer more secure services with better privacy of data, and it's enabling fast cross-border payments that are regulatory compliant. But here we'll take a look today to see just how they're innovating and disrupting with the blockchain. So to kick off discussions, I'm delighted to hand over to Gareth, across the table from me here, from Invenica, who will share with us some insights about roaming settlement and fraud reduction use cases and top 3 insights. So Gareth, over to you.
Okay, thanks, Mike, and thanks for having me here today. I think before I start on the individual use cases, and I have honed on 2 use cases, roaming and settlement and fraud reduction and identity, I think ultimately we need to understand the landscape for telco and media and why they need to innovate, and ultimately that's driven by competition. The business of the telco provider or certainly the telco operator has been under threat for some time. There's new entrants into the market. And in order to compete, they need to innovate. Now, blockchain and DLT, we've seen various applications, pilots, proof of concepts across all industry types. And you touched on CordaCon last week. Great conference. The conference is growing. It's bigger than it was last year. There's lots of activity in 2019, and that's fantastic for blockchain and DLT. Without a doubt, and I think I said this to you last week, DLT and blockchain will change the way that businesses conduct business, whether that's helping them improve their operations, doing the same things that they do now better, or whether that's doing the same things that they do now differently, or whether actually that's new business models, new products and services. And that will happen across all industries, without a doubt. I think right now, the telcos are trying to work out, given that backdrop and given their investment, and it's probably similar, there's lots of similarities with the banks, is how can we do that? Certainly the big operators, perhaps not such a case for the smaller ones, but certainly the bigger ones, is how do we do that and actually augment what we've currently got, all of our legacy, the investment, and how do we balance that against the investment decisions that we're making today? And those investment decisions, we've all seen it, is essentially things like 5G networks and the massive amounts of money that they invest in 5G networks. So that's a bit of a backdrop, and telcos are trying to work it out. I think, and I've come to this first use case on roaming, settlement and fraud because actually there's a common interest in the marketplace. Back end of 2018 and lastly during the course of 2019, operators are starting to collaborate together. In the news last week, it was talking about successful trials related to roaming settlement that were conducted by Vodafone, Telefonica and Deutsche Telekom. Some of the same operators are involved in other initiatives like the communication blockchain network, which R3 and Corda are also involved in. And then, there's things like TM Forum, Blockchain Unleashed, which is a group of operators that are also conducting. So there's lots going on. I didn't want to focus on one particular trial. I think the important part is that this use case is seeing lots of interest, lots of collaboration, and that's driven ultimately by two things. So this is an example of doing the same things, but better, using a different technology, right? Can we improve our business processes? And the operators share a common objective. They want to improve their operational efficiency, they want to reduce their costs, and they want to eliminate fraud. And DLT can help them do all of those things. Okay. More importantly, in an industry and similar to financial services, in an industry where perhaps partners are partners and there's a lack of trust between those partners, the technology provides that layer of trust. So if you're working on a distributed ledger where everyone sees the same thing, then everything there is shared by the operators that are sharing that information, right? So how does it lend itself to, and what benefits does it bring? Just to add to that, the roaming volumes are increasing. Complexity will increase. IoT is going to go boom. They're predicting in 2025, I think there'll be 5 billion devices. Of those, probably something like 15% will be roaming. And manufacturers that have deals with operators that implant SIMs into their roaming devices don't necessarily know they're going to be roaming, right? That adds a layer of complexity because actually the way you transact through an IoT device is different. There are lower levels of transactions, but more frequent. And as we all know, the clearing houses work based on the transactional number of transactions, so the cost goes up. So the operators have to do something about this in order to become more efficient and save money. The DLT implementation for this use case allows you to improve your fraud. So the way it works right now is you have you're visiting and you have a visited public mobile network if you're roaming abroad, for example, and then you have a host public network where your account or your operator exists, and the visitor collects data, sends it through a clearinghouse. That clearinghouse validates that data, and then a bill is sent from the visited public network to the host public network. Now, as you can imagine, that's open to fraud because there's a delay on that. And ultimately, the host is responsible for the reconciliation and payment, whether that is a fraudulent roaming device or not. Right? With blockchain, you have an immediate view on the transaction, so you can spot fraud instantly. More than that, you are actually identifying the user instantly and accepting that transaction. So what we're actually doing is removing fraud, and in fact, fraud can be as high as 15% of the operating profit of any one mobile operator. So there's a big case there for fraud. It can cost, I think they're estimating it costs 38 billion per year. So we're removing, or we give the opportunity to the operators to reduce that fraud. But equally so, we're talking about immediate transactions, the ability to remove the intermediary, the clearinghouse, and therefore save the operators a lot of money. Hence why this has gained a lot of interest, and there's a lot of working groups looking at this. And I predict that sometime in 2020, this will go into reduction somewhere.
Well, I think that's a good point to pick up, and Richard, I'd like to bring you in here. And Gareth, just to set the scene here, how global is global, how local is local? So we've got Vodafone have done their 5 cities for 5G, which is fantastic, but I think they've only got 4 or 5 masts there. The carriers have spent a huge amount on spectrum for 5G, but we kind of bundled together, no pun intended, 5G, IoT, blockchain, DLT, crypto, identity management. There's a lot in one piece there to unpick that aren't necessarily all related to each other. There's just a whole bundle of stuff going on. In terms of the telcos getting the biggest bang for their buck, you mentioned the cost of fraud. Is that identity fraud using carrier minutes? Is it payment fraud? Or what in their priorities were the ones out of all of this plethora of stuff, this is the one that's going to make me the most money? And
maybe Richie wants to answer that. I can answer that. I have an idea. Yeah. So, I alluded to the fact that I'd just come from a meeting with a customer before this. And I think, that's because of the challenge that the operators are under, then that's exactly what they're doing. So they're saying, what saves me the most money? Yeah. And what do I need to do? Forget the technology. What do I need to do to save the money? And how can technology help? And the second thing is that everything I do relating to a new product or service, how does that make me money? Right? And that's what they're looking at. More to that, and I was just going to finish on the whole concept behind what they're also looking for is partners that will bring them ideas, so business ideas relating to specific technology.
Sure. But maybe, Richard, to your point.
If you break it into 3 parts, which is kind of the basics of a telco, their entire operation requires them to spend large amounts on an ongoing basis to keep up. And that's because they've got a market that is changing. During the 90s, they brought on 100% of the population, and then Sweden broke into over 100%. And suddenly there was a realization that saturation wasn't 100% one mobile per person. It was actually going to be more than 1 mobile per person. And out of nowhere, they realized that 3G was not going to be enough. And therefore 4G came along, where they started to increase. We're now got into a situation where I don't actually know whether it is more cars have got SIMs than people yet, but I think it's perfectly reasonable that they're selling more cars. Every car has a SIM card in it, so actually going to get to a position where you've now got a market where there is more things with a SIM card than people, and that then gets you a position where you've saturated 4G, and funny enough, you now move to 5G. 5G is all about that ever-changing market where the telcos, what they designed and spent for isn't what they ended up doing. The second part of that is actually the telco doesn't change. They've got to get their money back on that investment, and therefore they've got to charge revenue. What they're charging revenue on used to be minutes. Now, then it was megabytes, and it continues to say, well, what is it now? And they've got to continue to change what they're billing for. The last but not least is profitability. You're trying to get the greatest amount of revenue for the least amount of cost. So you've got to go after your cost base endlessly, because if you're investing, what you actually do is pick up a cost base that continues to rise, and you've got to keep spending money to get the cost base down. What you'll see over this webinar is, there are 2 areas that some of these technologies are coming into, blockchain being one of them, is in that bottom line efficiency.
Yep.
Is it tightly coupled? I mean, the rollout and adoption of DLT, innovation of 5G, are they coupling that? Are they saying one needs to follow the other, two different architectures? How's that going to work?
Well, I think it's more about what DLT lends itself for, and Richard, I touched on it when I was talking earlier, the explosion of IoT devices, 5G.
So 5G dependent, though. We need 5G.
5G and edge computing in order to, you're going to be looking at device-to-device payments, right? How do you reconcile all of that? And DLT lends itself very well to. So yes, there's a lot of investigation around how DLT can provide the underlying technology to support the rise of IoT traffic, IoT transactions, or device transactions, etc. So yes, they are intrinsic.
Fantastic. Well, I think if we crack on to the next part of our presentation, next up is again Gareth. Oh, sorry, back up one. Here we go. So you're going to Gareth continue chatting. This one was on identity and digital communities as the next use case.
So I think this is kind of I've just talked about where the telcos are keen on trying to solve a current business process. Right. If you look at identity standalone, then identity for a telco is a current business process. Right. If you are asking the telco to replace what they currently have, so their current identity management systems, SSOs, etc., in isolation with a new technology, they're probably going to tell you that's going to be too costly, and it's not going to give me the business benefit that my leaders or my senior management team, my board are looking for. So this is a great example where identity, where again DLT lends itself excellently to identity. There's a lot of talk now about the consumer having sovereign identity, so they're in control of their own identity, improving the process of onboarding using DLT, so you only have to do that once you've built your ID and it's been validated, you hold a private key which you can use then to procure other services, right? And that's great. But on a one-to-one relationship, between you and the telco, that's probably not going to gain the traction that the telco needs in order to justify it from an economics or business perspective. It's when you start combining these things with other potential identity as a service, identity create revenue streams for the OpCo, and the telco is well placed.
And to actually monetize that, is that
because they hold key information. They hold a lot of information about the consumer and about their customers. So potentially you could monetize that in one or two ways. You could sell KYC services to your partners, and if you think about the way that the telecoms providers, the operators have the services that they now provide, they're not their own services. They're provided by over-the-top suppliers, so broadband providers, quad play providers, the experience of this world, and the consumer procures those services through their mobile and charges to bill. Okay, so they have a partner ecosystem, right, which they can extend. So in theory, they could, once they have identified the consumer using DLT, they can then enable the consumer to easily procure additional services from partners or new services from new partners within that ecosystem, without the need for the consumer to fill in multiple forms and KYC again. So you could essentially sell that service to your partners, and people are looking at that. Again, though, is that enough in isolation? So you add something else to that. So is it possible for me using DLT to identify and store data on behalf of, or certain data? You don't store it on the blockchain, but it's a verification process. And there's applications for that. So in storing and for partners' insurance documents, university degrees, etc. So there is a potential for them to monetize it in that way. And there will be further ideas. I think where we wanted to lead this today is that, and there's lots of activity in the marketplace from the large organisations, not just in telecoms, we're probably familiar with Facebook's initiative of Libra and the coin there. There is an opportunity for organisations, maybe Facebook, maybe Google, whoever they may be. There's retailers that are looking at this to build an ecosystem where actually the consumer is in charge of their own identity, but is procuring services within that community, and that's underwritten potentially by a coin, for example, a token.
But is there going to be a separation here between DLT, or distributed ledger technology, and blockchain as a concept of immutable records, away from a store of value, away from a coin, or just because that's because of Facebook Libra? I mean, I think we can get a skip and a jump. We can understand possibly adoption of ID, although it'd be interesting to see who would centrally manage that. Do you have several IDs? How those keys will work? Then to monetize those, they can get. But I think the coin one piece is going to be a challenge. Do we see like a future where we have a telco coin for services or a token?
And maybe I've gone too far because there's some steps here.
Yeah.
So if you look at mobile money, that's nothing new. Can the telco, given that they essentially can develop a wallet on your phone.
Revenue's already there, right? So yeah.
So you could do peer-to-peer payments. They're looking to do payments between devices for IoT. They can do payments between consumers. So and it's not just telcos are looking at this. Walmart are looking at this in the bigger concept as well. So I can't tell you where that model is going, but it's evolving and it's being pushed and it's being tested. And there will be some restrictions and we've seen it with Libra, and the government's getting involved, and essentially because they're scared of losing control, and I understand that.
So kind of unpick some of that, and then Richard, I'd like to bring you some questions here, and before we move to Richard's presentation, but to unpick some of that. So we've got the telcos. We can, I think, readily get kind of fraud, identity management, secure. Those elements I think work well. I think we could see definitely ID. I definitely could see the data monetization. Kind of tons of data, how that might monetize. But an unnamed telco carrier is my carrier in Ireland, and I pay €20 a month for all you can eat data roaming. $20 a month.
Yeah.
Pay as you go.
Yeah.
It's shocking. They're not making any money out of me. And the minutes is unlimited minutes. So they have to get 5G to be in the game, because they don't have 5G, they'll go to someone else. I have 4G at the moment. So I completely think that the telcos are completely primed to look at the assets that they've got, which is a pervasive way to reach people. I've got all this data, I've got these folk. How can I make this a community and a network?
Of course, you need to add to that as well, because they've all given 5G away for free.
For free, yeah.
Well, if you look at a lot of the services you get on the internet now require you to go through a login and a password, but then send a text message to your phone to prove that it's you. And they're using the device as what we would call two-factor authentication. It's an identity.
Yeah.
You own that device. We know that device is yours. You're effectively owning your identity in that regard. And that's how they're proving that the person who's anonymously coming onto the website is actually Mike Wilson. And that, for them, is suddenly a service. As Gareth is saying, that identity is a service that they can start charging you for, or certainly charging the services you consume. So right now, those websites are freely riding on the back of those text messages to prove that it's Mike Wilson's got that. But it's only a matter of time before those websites get charged to use that phone for the purposes of proving it's Mike Wilson.
Yes,
so you've got to remember that the telcos have a lot of data on you. They have a billing record, which means they've got a credit history, and they're starting to know, certainly on the pay-as-you-go, how for people on pay-as-you-go, you might have very little credit history elsewhere in the system outside of the telco. The telco can actually tell the website, these guys are good for credit. So actually, if you're, let's say, on an Amazon website, you could be buying something, and Amazon could actually offer you credit to pay for this later, because in actual fact, they see you as a good credit history based on your billing data.
Sure. I mean, when we look at kind of behavioral analytics and predictive behavioral marketing solutions that are out there in the marketplace, this is manna from heaven. this is the golden key. But I'm mindful of, if we think back to the first BlackBerry, and I remember securing those at Deutsche Bank, we paid 35 quid a month, 1999, 35 pounds for 100 meg, because it was delivered via BlackBerry. It was a premium. So there was days where people attached a premium to roaming content and that, but you're right, I think data now is ubiquitous, it's unlimited. To unlash these things will require other functionality and other ways of kind of managing their business. So I think it's, it's great when you see folks like BT and Vodafone becoming content cable TV content carriers as well. So
it's just about adding services.
Adding services, that's right.
Keep heading up the value chain.
Brilliant. So next slide, please. If we go back just to digital, I just wanted to ask one thing about digital ID verification, which is we're not very good at privacy. I mean, an EU-US tension particularly, or GDPR, or everywhere we want to look at how we handle data and people's perception of data. Regardless of having all the tech to do this, are people that willing and that trusting of folk handling their data this way, these corporates?
How many times have you handed off a passport of your passport this year? A photocopy of your passport this year, Mike?
Yeah, I actually had several times actually.
Yeah, several times. Yeah. And that document doesn't have any verification on it. There's no proof that it's your document. There's no proof that it's a valid document. You were asked for it because usually in the KYC and know your client requirement, you have to hand off a passport. That company on the other side has absolutely no idea that passport is valid.
Yeah, well, that's a phosphor. That's opting in, though. I've chosen to give them the comment. I'm talking about when you don't opt in and they look at the data on your phone and they control your ID and your whereabouts and your logging and watching you. Do we feel that the consumer's ready for that?
Well, that was why they did GDPR.
GDPR, okay.
And that legislation, and actually I agree with that legislation. That was the right move and the right thing to do for the consumer.
You opt out until you opt in.
And this is and it's a great question because it actually leads to one of the challenges around identity as a service, because you have to give the consumer the ability to opt out.
Yeah.
Interestingly, I mean, we opt in all the time for anonymous data. You buy a smart meter and it sits on the side of your house. They give you a kind of instant readout of how much you're using, but they're the ones keeping all the data all the time. So if you actually wanted to know how much you've used over the year, or give me the history of, and I want to know where my peaks and troughs are, I know we haven't given you that data. We've got that data, but we're not going to give it to you. Now that's where that asymmetry is a problem for someone like me, who's actually very happy with the convenience of the services knowing where I am, and actually very comfortable handing my data over so that it makes it easier to buy things and live my life. But I want to make sure that I have that data back. And I want to make sure that I've got, it's not the control of the data, I've shared that data willingly, but actually into a situation where you've got all the data on me, but I don't have access to it. That's where what we're looking at are certain companies, and we do this now when you're on social media, you want to download one of your posts? Oh, no, we can't download that post. That's my post. Well, hang on. But if you go into a company like Google, they from day one, Amazon's a great example. You buy music from Amazon, ever since 1995, if you bought a CD, that's a quick thing, if you bought a CD from Amazon, you can have the MP3 going back to 1995, which is incredible service. You can always have your data that you've purchased. Google, if you go into the bottom of Google, look around, you will find that you can download your data set. Everything Google knows about you, all your emails, everything you can download. Certain companies are out there who just won't offer that up because they see it as part of their value prop to own that data, and that's a problem.
Well, and I'm going to move on to the second problem, but just to round it off, and in case our audience and our just wondering about this, when you go in and say, I accept these cookies, and you visit a website, and then you go next on the social media, seeing your spam with adverts for that firm. So you can see how this data has been harvested, gathered, monetized, and the amount of time. So I'm just looking at that. How did it know I wanted one of those things?
Actually more irritating, Mike, is the fact that you bought 4 shirts from a company, and then you spend the next month being chased around the internet asking whether you want to buy 4 shirts. I bought 4 shirts. How can you not?
I should mention that we built something.
Yeah, exactly right. This isn't a time for naming names, but it was Gareth Mead and Invenica. Very good, excellent, very good. Okay, guys, so we're now into the second part of our little piece here with the presentations, and I'm going to on to Richard, who'll share how blockchain has been used in the supply chain, along with some key. So Richard, please take it away. Blockchain and supply chain.
Yeah, so I think we're reflecting on CordaCon 2019 last month. Some of the key theme that comes from that CordaCon 2019 is just the sheer number of enterprise projects coming out using blockchain or being on the blockchain that are going live over the next 6 months. And it's always been in this industry over the last 5 years, is like when are we going live, when is it? And sort of always the sort of 2018 is the year of production, 2019 is the year of production. And actually what we're now seeing is 2019 is the year of production, and we have gone through that trough of disillusionment, as we normally call it in the industry, and we're now moving on to that plateau of productivity. People are actually doing this, and that's where, on this first slide, we're starting to see the emergence of one of the leaders, Marco Polo. That's a trade finance blockchain network sitting on Corda. That underneath the covers is a partner called TradeIX, who is pulling in. And every day and every week we see another company coming onto the Marco Polo transaction network, providing trade finance solutions. That may be invoice financing, or it may be letters of credit for the banks when they were coming into this space. But for the real companies in that space, what they're moving towards is being on the same page. Doesn't matter if you're the supplier or the client, doesn't matter which side of the trade you are. In the real economy, you are starting to see a recognition that blockchain gives you what you were looking for, which is being on the same page. And that comes from, and is probably analogous to the move we did in email, where in the early 90s, you couldn't really send emails. No one was really on the email network. There was a small number of academics and a small number of industry on there. Very rapidly, we rolled out email within companies, and you could send emails inside your company, and we thought this was great. We get rid of all the paper memos. And then in the late 90s, we started to connect those email networks up, and we did that over the internet, and that allowed us to actually send mails inter-company, and that meant colleagues inside your company or clients and suppliers outside your company had a transport protocol network you could communicate over. We can't even think what it's like to run a business now without email. Well, the same is starting to occur in a network like Marco Polo, where as people come on board and they are starting to get on the same page around their invoices, credit notes, letters of credit, actually we're starting to see a way of creating what we would describe as an internet of value. In that respect. And
so how this will work, just again for the listeners out there, there's like the premise of an API call out to that database. Is this a membership based or tariff based per transaction, or the economic model behind this, Richard?
So I think it's a really great question, Mike. The aspect of this is really hard for people to understand. We've spent the last 25 years
doing the old way.
Building websites. Right. And everybody says, well, that's not new. That's the new thing. Well, that has actually, the whole generation of engineers who've come through with the only aspect of, we've got a database, got a web server, got lots of web clients, web browsers.
Use microservices and libraries.
And we all come out. And the growth of Google, Facebook, Amazon tells you what happens over time. If you play that out, you end up with these large centralized databases. That's what Google is, that's what Facebook is. Amazon is. And they start to control a large chunk of the market, which actually the suppliers and clients don't really want to do all of their transactions through that. If you look at email, which was probably one of the last distributed networks we actually rolled out in the early 90s, that is a network that no one owns. At that time, someone like Microsoft would have given their right arm to have owned email. But actually, email is a distributed network of mail servers, and the email moves around. That is not dissimilar to what we're seeing here with Marco Polo. These are each a legal entity coming onto the network. They are a Corda node underneath the covers, sitting on the Corda network, and they are interchanging information and then on top and ensuring that that information is the same on both nodes. So they have created a distributed ledger of information. No one party owns the database and then can make money out of that. No single player can create a platform that owns it. In terms of how they're connecting, they are, just like they did with a mail server, running up a server and then connecting to their node and then communicating with other companies over that network.
And in terms of I can get the compelling functionality of it. So trade finance underpins real things, real assets. it's a horrendous paper trail of things that then eventually has foreign exchange hanging off the back of it, and currency payments and payment systems hanging off the back of it. Just a little bit on the commercial model. Today, pay per trade is like a subscription model. The economics of this thing. So I'm an importer of tables, and I want my table importing firm connected to the LBBW. I beg your pardon, onto the Marco Polo Trade Finance Network, Richard. Do I get charged as a furniture importer?
Well, it's really good that we're moving on to these types of questions.
Yeah.
Where instead of talking about which technology we're going to use and how does it work, as we all recognise, actually 99% of the population doesn't understand how GPS works. They just understand that it tells them where it is. I think if you look at that direct question, the network underneath the covers is a public network. The Corda Foundation runs that, and that charges per transaction, but it's pence, tiny, cents of things. And that's much like the same, how much do I pay per packet of data across the internet? We do pay per packet or megabyte, but you don't really notice that because it's so tiny. And I think that's where we're looking at this. If we look up the value chain, each of the organizations in this are actually charging probably down similar business lines. And you're not looking at some sort of clip that people are expecting to get from being on that network where you're paying per transaction, per fee. Those are those kind of classic platform plays. If it went through an Ariba network or a Google network or an Apple iTunes, what you're actually looking at here is, in this instance, the Landers Bank lender is undoubtedly running they are running their own business model, their normal business model.
I can see the attraction
And then on the other side, you can see LBW coming in, asking to borrow.
In terms of balance sheet efficiency, capital financing, insurance, I mean, it's all there, isn't it?
But the cost of doing that, and that's where blockchain over the last 5 years has been, most of the focus has been on what we would call cost efficiency plays. We're not trying to, in these plays, improve the top line. What we're trying to do is get rid of the cost of running these types of deals and then running them over their life cycle, where actually chasing the pieces of paper and reconciling between two sides is the larger cost of this. And that's what they're getting rid of.
So next slide, please. Great. So you've got a couple of highlights that you've picked out here for that user case, Richard. Should we just have a quick spin through those?
Yeah, I think the most important one is we're getting on the same page. This is about making sure that what you see is what I see. And that has been the underlying principle of using blockchain and the focus of blockchain over the last 5 years. That drives a cost efficiency play where a lot of companies have worked hard to get the cost down inside their houses, and they've done a pretty good job of doing that. And if you haven't, then you should be. Most have done that, and now they're looking out and going, well, where's our next cost efficiency play? Now you've got a technology that lets you reduce your cost between you and your clients, you and your suppliers. And that is what the first. I think the final piece, which you started to allude to, which is, hang on, these invoices that are moving around, these letters of credit, those are valuable. Those are actually, if you're a banker, those can be an asset or liability, depending on which side you stand or what they are.
How many shirts it is.
Yeah, exactly right. And therefore, what we move on to now is the top line opportunity. And I think the important thing to recognize here is we had artificially split Bitcoin from blockchain, so we can have a conversation about blockchain because we could see that as a useful technology as a cost efficiency play. But we always knew that what they had created in Bitcoin and the experiment that we've been going on with the store and transfer of value in a private currency of Bitcoin has a top line opportunity. So I think if we use that as a segue into the next slide, that then takes us into. It looks like you were trying to cover something else off.
Yeah, fantastic. Sorry, I think this is well versed of blockchain improving the supply chain. I don't think we need to cover that personally now. I think if we move swiftly on to your next user case, which is billing, I think would be great.
Absolutely, and I think this is where the top line opportunity starts to emerge. We've all started to see in the crypto space the idea of wallets, the idea of new currencies appearing, those currencies that have evolved or new currencies have turned up that are actually financial instruments. They're securities. They've been issued on behalf of a promise of future revenues, and we've seen lots of projects go out there. That huge bubble that went through kicked off a disruption in the capital markets business, and that's fascinating to watch, but more importantly, be part of. As we are in Lab 577, part of that token economy, where we are seeing companies wanting to issue tokens that are worth worth money, create their own currencies. And in that regard, what we've got here on the screen is Uber. This is one of the, not the first, won't be the last, but it's an absolutely well-known brand heading into financial services. For those of you who've been following the Libra story, that is a normal play for Facebook coming in. But to get away from Libra and actually look at the next one coming in, this is Uber, who have worked out that actually the app that they have in each of our pockets, be it a driver or a passenger, is a digital wallet. And in actual fact, they can now start providing credit directly into that wallet. And they can do that for their drivers, who may find themselves in a situation at the beginning of the day where they don't have the capital to buy the fuel, petrol, for their car to then start making revenue from the passengers. And Uber then finds themselves as a financial services company providing credit to the...
Subbing them,
Subbing them the petrol, so they then can start the economic cycle of actually being able to generate revenue, which of course Uber then takes to turn on. They have a large number of customers worldwide. They are operating in multiple currencies, and there is absolutely no reason why their customers can't be transferring credit or debit between each other. You've got yourself an instant cross-border payment network in your pocket already. And Uber have worked that out, which is why they're coming into the financial service space. And this leads us into what we describe as financial services being turned inside out, where to date, we all think that you have to go to the bank to make an international payment. And actually what we've been watching is a fintech revolution of lots of non-brands or unbranded companies challenging that and coming out of that financial space, going into that financial space and operating as services. But actually what we're now realizing is you don't need to be a bank to provide financial services, much to the horror of the regulator, who woke up one morning to find that Facebook had decided to create their own private currency. And now you've got Uber rolling in, about to start offering financial services to their customers. So this is a financial services being taken out from financial services and being poured into each of the verticals. And I think from a telco perspective, they are very much right at the forefront of that, where they have a billing circuit with most of the population, and they actually have probably near the same saturation level as banks do in terms of the billing circuit. They have probably more knowledge of the customer's location, credit history than the bank. Payment history.
Yeah.
And they have the ability, and they have a phone in their pocket, which means that they can now offer up digital or financial services in that digital space.
So bring Gareth in there. So Gareth, kind of top and tails nicely with your piece there. So
absolutely, and
bank,
we're talking about Facebook, and we've seen the news on Facebook and the pressure that they've received. Richard's rightly pointed to Uber. They're the next Rakuten, the Japanese equivalent of Amazon. They've been allowing people to buy in Bitcoin on their platform for a long time. They've just got authorization from the Japanese government to set up a currency trading platform on their platform. They own Telco, they own a bank. It won't be long before they have a community in Japan, a big community. They have a B2B2C play. It won't be long before they introduce or will be looking at that play or that business.
Well, Zigo is a client that we worked with, and they work in the gig economy and with Deliveroo drivers, and they've offered an insurance product that is insurance per mile traveled, tracked through IoT, through location tracking, that you pay as you go insurance. Absolutely fantastic. So next slide, please, Hayley. Right, so what are the payment mechanisms that need to be in place when transferring digital assets? And I think this will be a good time maybe for our listeners to, obviously we've touched on Bitcoin and crypto and but I think just a little kind of recap on what a digital asset is, how those things move around a little bit, and what that means in this world. I don't know if you want to touch on stable coins or other stuff, but if we start with you first, Richard, just on that piece, and then you, Gareth, and then we'll do a bit of a roundup. So when it talks about these payment mechanisms and digital assets, and I think obviously your Dazzle platform there too, which you might nicely touch on that for everyone.
Yeah, so I think to step it back a little and recognise that when we rolled out the internet and we were all part of that wave of information sharing, we created an internet of information. The experiment that we know of as Bitcoin triggered a recognition that we were now at a position with having rolled out that internet to start transferring more than information. We can transfer value. And that means that we can actually create stores of value, be them new stores of value in Bitcoin, or actually digitize assets or liabilities that we currently have, debt and equity, and start issuing them as digital assets, tokens onto the internet, onto the blockchain. And that those assets, digital assets that we're starting to see emerge, we've seen a wave now of capital raises where we have issued securities, and those securities could be in companies, they could be in companies that are holding.
So rather than going through a bond route or lending or an IPO, so there's an alternative route to capital.
And this takes us from, we watched the capital markets move from paper to electronic. We got rid of the outcry traders and everything became on the screen, trading on electronics. But actually, at the end of the day, it's still a database that one company owns, one bank, an investment bank or trading house owns, and the other trading house also owns a database with electronic records. What we're now moving from is from electronic to a digital aspect, where that digital asset that may have been created by one financial house or one company, an invoice, actually only the supplier and client have a copy of the invoice. They may have emailed it over email. That's just an information internet. But actually, if that invoice is represented as a digital asset, as a token, which both sides recognize is immutable and, more importantly, transferable, actually they can hand it off as an asset that they can then create a asset-backed security, or they can lend against, or they can give to the bank as collateral for a loan. And that digital asset and the transfer of the digital asset is what we are now seeing as an internet of value. And that internet of value, as we emerge on to these networks, is really what we're seeing as the disruption in the capital market space, the creation of capital as you describe it. That has a knock-on effect down through corporate, into commercial, and all the way down into retail, where we see it as payments. How do I pay you? And actually, if you look at someone like Facebook, they're simply trying to work out a mechanism for paying people over their Messenger or WhatsApp app, where currently today, when you're chatted by your mate to say, you owe me 20 quid, you have to come out of WhatsApp, disappear into your bank, and then pay them. And what Facebook is trying to do is make that a seamless user experience where you can pay them over WhatsApp.
Well, this actually brings a very nice question to Cara, actually, because I am conscious of time, and it's the audience Q&A part now, so we actually have had a couple of questions come in while you're tapping away there. And one of them is directed to you, Gareth, and as telcos have to deal with a large number of contracts, how does blockchain technology simplify the way these contracts are created and shared?
Well, essentially, you're setting up what they call smart contracts, which are based on it's a digital contract. So you don't need, coming back, let's use the roaming case study. So right now, I was reading somewhere that Deutsche Telekom, for example, Deutsche has something like 600 roaming agreements internationally.
600,
right? So all of those need to be negotiated individually, right? It's normally a paper contract of some form, right? There'll be different tariffs based on different volumes, and then the clearinghouse will take those agreements, they measure against the records that come in from the various operators or the partners that they have roaming agreements with, and then they send a bill and it's reconciled. What if you dispose of all of that and you just have a digital contract that says once these terms and someone makes a call, they're abroad, once these terms and conditions are met, right, that's that user. Yes, they have the right to roam. They've used that many minutes. That's the price based on this contract. Execute, and you're automatically reconciled. Well, that's it.
And so, yeah, why wouldn't you? Just thinking aloud, there's 600 contracts. That's one carrier, one user traversing two or three times.
I'm probably light on that number.
Yeah. I'm going to say millions that must be just tied up in unclaimed slushy of money sitting in the ether somewhere that hasn't been paid for or drawn down.
Well, equally,
the amount of inefficiency in there.
Well, equally so. Capital is king to the telco provider.
Yeah. So hang on to the money as long as they can.
We can turn it on its head or get the money in.
It's unbillable minutes, all right. So what they've got is an IOU that someone has used that. They've used the tech, but you haven't billed them for it. So actually, this efficiency means they're going to get money in quicker.
We're talking about cash. We're talking about cash flows. Really.
Yeah, brilliant. Right, as luck would have it, Richard, I've got a question for you too. So we've got a question of these. Okay, it's a telco question. It says, so global telcos have different arms of business in many different regions globally. So how will blockchain help a firm transact regulatory-friendly cross-border payments? So I guess the question here, if I pick through the questioner, is the regulatory framework for cross-border payments and what happens in this digital asset shared world, who has the governance and the oversight?
Yeah, so this is always a good question, because as people start to think about, I've roamed across 3 countries. I may have made a payment from one to another while I was roaming. If you're inside a global telco, some of them are highly centralized, some of them are very federated. No one solution fits all. And that is not dissimilar to what the international and global banks found themselves in the early 90s as they started to globalize and become international. The banks became global with different arms of their business in many different regions globally, and they started to wonder how to make not just cross-border payments but settlement from a banking perspective, and make sure they stayed within their regulatory requirements in each jurisdiction. And I think that's where the emergence of frameworks like ISDA, where the securities industry came up with a legal framework that would allow them to operate in a multi-jurisdictional space, knowing that they're going to settle a euro bond between a US and a Japanese trading desk. How do we make sure that it's going to settle? And if you look underneath the covers of each of these jurisdictions where we're trying to operate, you will find that ISDA has already been baked into the rule book, the legal, and most large companies have already got themselves involved in that ISDA agreement. And actually, that legal framework already exists. So we can reuse that because it was something that the securities industry had to cover off in the early 90s. And as other verticals are starting to rack their brains and work out how they're going to do payments in a regulatory-friendly fashion, they will discover that things like the ISDA framework is something they could use too.
Just leverage that. Well, there's a lot of excitement about Malta as well being a kind of regulatory-friendly place to setting up banks. If you ever try to sell it as a business, a bank using a crypto account, good luck. Well, guys, we're coming very close to the end, and but what I wanted to do was I'd like to finish in Gareth, so I'm probably going to go to Richard first. Sure. Just to give us one thought you'd like to our audience to take away from today's discussion in just a minute. What would that be, Richard?
I think the audience probably has spent enough time reading about blockchain, may have had some interest in Bitcoin, but has certainly recognized by now that blockchain is here to stay and is there to drive a cost efficiency play. I think the one insight they want to take away from today is there is another entire side to blockchain in that top line opportunity. As we see financial services being turned inside out, you in your vertical, doesn't matter if it's telco or somewhere else, have the opportunity to start transferring and storing value to help your suppliers and your clients deliver better and more impressive services.
Internet of value, that's going to be my key take.
You're going to take away internet of value.
That's mine. I'll have that now. Gareth, as what a closing piece you'd like the audience to kind of take away from today?
I think, and I touched on it at the start, there's, and from a telco media perspective specifically and using DLT to innovate, we talk a lot about the technology, what the technology will enable, what potentially business benefits that can bring, whether that's cost savings, significant cost savings, or whether that's new business models. But ultimately, and this is the challenge, and it's not just the challenge in this industry, is how do people that each other collaborate, right? And that is what we need to be able to, and I alluded to the fact that I think industries are changing and our customers are looking for us to be true partners. So, what partner network do you bring? What proposals or business models do you bring? What are you prepared to invest in it? And I think those are the collaborations, and it's not just Invenica and Vodafone, it's not just Invenica and Lab 577, it's got to be a collaboration of like-minded people. The beauty, coming back to the technology, and as I alluded to before, particularly related to the roaming use case, is that it does provide that layer of trust.
Very good. Trust, transparency, and collaboration. Brilliant. So many thanks to Gareth and Richard for taking the time to share us with their insights, and to Invenica, fair play to you, Gareth, for bringing this event to market. Really great. It zipped along as well in time, didn't it? So this session has been recorded and will be published in the next few days. And there's also an accompanying industry article to follow, which Hayley and Joseph, I think, will be pumping out. So for more information for today's slides or to discuss any of the topics discussed today, please do get in touch with Invenica and Lab 577 at the usual online spots, LinkedIn, or to start a conversation directly with them. Your inbox is always open, guys, right? So
absolutely.
So until then, just say thank you very much. I really enjoyed that. Thank you very much to our dear listeners for attending. I look forward to welcoming you all to the next one. Thanks.
Thank you, Mike.